The ProACT Know-How, brought to you by ProACT.
Hi, this is ProACT Sam. Welcome to this episode of Living and Working Abroad. Even non-resident expats can still pay UK inheritance tax at 40%. Actually, they can't. The purpose of life is to die, as Frank Kafka said, and inheritance tax is a tax on death. But if you're an expat or non-resident, you could still pay UK inheritance tax, and here's how. If your UK assets are more than assets in any other jurisdiction around the world, then you should do a worldwide UK administration. That is what English law says. It doesn't matter, you don't have to be British. Any expat living and working in the UK with more assets than anywhere else needs to do a probate administration in the UK. Similarly, or completely differently, depending on your correct choice of words, if you die in the EU, under EU law, you have to do a worldwide probate administration on your assets in the country you are tax resident at date of death. So if a UK expat has property in Spain or Cyprus or France, and they're living there as an expat and they die, but they've got £1 million property in London, or a series of investment properties throughout Manchester and the north of England, then you still have a probate liability in the UK as well as in your EU country of residence. Discrete tax planning in the past may have allowed you to get away and do separate administrations. However, exchange of information introduced from 2016 means that every bank account and every salary, every social insurance, every property rental, every lawyer, every accountant, every bank, every financial institution is obliged to exchange information, and all the information goes to the tax authorities, and your tax authority in the UK will show it to your country of residence, or vice versa, depending on where that asset is. So there is exchange of information, so you can't hide the fact that you've got overseas assets without breaking the law, which is not what we advocate. So what we're saying is that you need to plan ahead and look forward to your inheritance tax assessment, and plan and organise your affairs to do that. If you have to do a probate administration in the EU, you need tax clearance from the UK. If you're doing a probate administration in the UK with EU-based assets, then or worldwide assets, then you have to get the tax clearance from the other country. The probate administrator is obliged to declare on the inheritance tax return with the probate administration in the UK to declare worldwide assets, and therefore the overseas property, business, investments, boats can all be included in that assessment. How can you avoid that? There's lots of different ways, but it needs to be planned ahead to organise your affairs by making a will, making gifts, making a family trust to hold assets across border and down generations to protect your family and make sure that future generations get treated in the way that you want them to do. 40% UK inheritance tax on worldwide assets can make a big difference to what your children, your grandchildren inherit from you. To find out more, go to our website at proactpartnership.com. We've got some guides that you can download from our shop, and we've also you can have a free review by contacting us at the website, and come and find out some more about how your situation, even as an expat, even as a non-resident expat, could still leave you liable to inheritance tax. Do a free review, quick checkup, make sure you've got none, and away you go. Go to our website, download one of our guides or contact us for a free review, and we'll see you again next time. Thanks for listening.
The ProACT Know-How, brought to you by ProACT.